Hello traders, Gary Wagner here. A little bit after 11 a.m. in Honolulu. It's Wednesday, the 14th day of December, and this is the daily report for gold and silver. It is for the third day in a row that we have seen this market sell off drastically down to 1574 in the cash gold market, down well below $30, in fact below $29 in silver. The dollar index, of course, rallying to the upside. Equity stocks down, crude oil off about $5 on the day. This day has been a day just earmarked with volatility and with the majority of the markets moving to the downside. On today's report, we will look at pivot points and where we think this bottom might conclude, all here on today's daily report. You know, we have seen this market in such a downward spin, a downward spiral, that the question now remains absolutely, where do we think this market might in fact bottom out, and when do we think this market could in fact bottom out? To do that, I'm going to look at a couple of different charts. We're going to depend primarily, of course, on Fibonacci pivot points or retracement points. We talked about this yesterday. We looked at a couple of points, and one of my major points was 1594. Here's another one at 1583. That's right here. And this 1583 corresponds to a 76% retracement. And the retracement is really earmarked from the beginning of the move that we saw back in July, when we saw this huge rally from about 1500 to about 1900. And when we look at it, it is now given up approximately 76% of that. You can see that our current print is below that price, but right around there. So 1583, that was one pivot point. Now, it did go through a couple of the other pivot points that we were looking at. I had one at 1594, hot knife through butter. It just ran right through there. And you can see that the other one that I had, and this is up here at 1603, I believe, ran through that rather hard. So the really strong points right now are this bottom of A and, of course, this bottom of a minor B within this intermediate A. You can see that it has gone through this particular Fibonacci retracement point, but is close to that area. In other words, trading currently at 74, and this pivot that we were looking at, or the bottom, is just above there. Do I think the market is stalled? Do I think the market is bottomed? Well, as I said yesterday, we have had no conclusive evidence of any kind of a reversal signal in candlesticks. The market is certainly oversold at this point, but where could it actually carry itself to? So for that, we have to look at a couple of points that we talked about briefly yesterday. I personally didn't think that we would see the market get to these points as quickly as they did. And so let's take a look at it from this vantage point here. We have the bottom of A, and that's at 1536. Now, if I would have said yesterday that I think the market could easily go to this point, and this, of course, right here would form what is called a flat ABC correction, because your A and your C would be equal. That would be, of course, if the market continued to trade lower and traded to an equal low here. Now, you can see, though, when we did hit this low, I recall it was almost only a heartbeat that we saw that low, and the market bounced right off of that. We saw a low today, intraday low. We'll take a look at where that was, but it was $10, $15 below this. It came off of that, but it's not finding very, very strong support yet in this area. So this would be what's called a typical flat. Anything that went below this particular A would be what's called a standard zigzag correction. In other words, with a standard zigzag, you get your A, your B, which is roughly 50 to 75%, fell right in suit, and then you get a new low on your C wave. That's what's basically called a standard zigzag. If that happened, where could the market go? Now, I personally don't think it's going to get this low, but you would have to start looking at around 1446 because that's your first real pivot point. Below that point, I don't think we'll see it, but you know what? If you would have asked me a few days ago if I thought we would see gold below $1,600 this week, I would have told you I personally don't think that is all that likely either. I, in fact, would have been wrong and have been wrong. I would not have predicted this market really selling off in the way that it has with the fundamentals that are in the market right now. In other words, this market has been reacting to a renewed concern about the European Union debt. There's no summit meetings coming up. I think that everything is kind of pushed off till about March of next year. So we're not going to hear any real concrete banter in the marketplace about that. There's rumors about a lowering or a downgrading in the credit rating of France. That is still has not actualized. From what I understand, any credit reporting agency that does downgrade a country would need to give that country a 12-hour notice. We've not heard anything of that. So we don't currently have that in the market. So you have a scenario in which what we are really seeing more than anything else is this market reacting as gold is trading at a risk on, risk off scenario as opposed to a safe haven scenario. And because of that, you see that the market has literally fallen out of bed. When we take a look at these lines here, you see I have just my markers that have not been updated. You can see that this has been going down. So what is our next pivot point, our target? And the flat pivot point, in other words, having the marketplace run to an equal low, and that would be a 61% retracement. And when I say it's a retracement, it is a retracement of this entire move from $1,300 to $1,900, starting back in February, January of this year. So the entire move that it took almost an entire year to achieve. And that is this large move all the way up to this top. It's a tremendous move, a $600 move. We have roughly given back at this point 61% of that move, and that would take you to 1542. That, to me, seems to be a realistic place in terms of a pivot point right now to be looking at. We had the intraday low, I believe it was 1534. 1534, I believe, was this low of A. So I don't think it's all that unrealistic to see this market trade at least to there. When we look at the amount of space that it would have to go, you know what, traders, it's almost there. So what do we want to do? We've been sitting flat in the market, and my belief is that at some point, this switch that turned this safe haven investment that has been a safe haven investment year after year, and the pundits out there turned the switch, and it's sentiment, obviously, market sentiment in play, but all of a sudden, what I was hearing was that it was no longer a safe haven investment as much as it was a risk-off investment, a risk-on, risk-off. And my sentiment is that switch will be turned the other way at some point. And when it does, I think we'll obviously see a rally in this market. But we have no indication of that yet. So as I said, my belief right now is our next potential target right now is 1542. We'll want to see how it reacts here. 1575 is current print. It's not that far away. Silver. We talked about the fact yesterday that there was, in my opinion, pretty much zero support if the market were to dip below $30 per ounce. And that's this pivot right in here. You can see that this market has basically dropped, I believe, down about 6% today, currently trading 28.86. Where do I think this market's headed? Traders, as I said yesterday, there's really, when we look at the technical data in here, there's not so much support. The real next support level is this low here, 25.92, call it 26. Do I think there's more room to the downside in silver? Until I see an indication, of course, that this market has gotten some kind of a reversal, has bottomed in some way, traders, my honest belief is that the target could be as low as $26 an ounce. Tremendous moves again in one day. When we take a look at the dollar index, now this is the COMEX weekly, you can see that we are again topping. We had a high, intraday high, 81.42. Currently, we have our print and close. I believe the market is closed 81.24, but this tremendous move this week in the dollar index. Stock market, again, I believe closed down about 136 points lower on the day. You did have some of the equities doing okay, some of the bank notes, of course. Treasury bills, there's been this flight to quality, which has gone into our bonds and our bills. Those yields have been dropping as the Italian yield went to 6%. So you have this really a flight to quality within the dollar, not within gold. Massive liquidation in the market. Will it continue? That is something that we'll have to look for over the next few days. We've still got a couple of days of trading. As we get close to year end, there's always a possibility of liquidations, but typically those liquidations are coming so that hedge funds and professional traders can pull profits out of the market, show it on their balance sheets. If there were any profits, a lot of that's been eroded over the last couple of days. Realize we've got the stock market, which was from beginning of the year till now, yesterday was flat. Gold was up fairly strong, but now I believe, based upon the yearly gain in gold, it has now dwindled to about a 6% gain, a fraction of what it was a month ago, but it's still up on the year, but it's certainly not up on the week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.